Subconsciously in the back of my mind, I felt like I wasn't working hard enough. I don't know if those of you can relate, because I was taught that you got to work hard, and working hard is active income and not from a passive standpoint.
We're all about becoming our own bank or becoming our own source of financing. So where is the blueprint for this information? Right down the street.
So anything you build has to have a foundation, a solid foundation.
I love that. Whether it's business, whether it's money, whether it's relationships, everything has to have a concrete foundation. You don't want to build your foundation out of straw.
Yeah, or on sand.
Or, good one.
And a lot of things that we've learned in our journey is that when it comes to making more money or earning compound interest, a lot of people try to look outside of what they're currently doing. But when you think about it, the reason why we're able to invest in things or people is because they are creating something. They're creating something of value that we feel like we need to give them our money in order to make more of a return.
Yeah, I think that you said create. Create is a big word that we overlook all the time, because any product or service that is out there in the marketplace has been created by someone. Whereas we look at these opportunities to create businesses or create cash flow as something that's not tangible or attainable, that's the word, and we shy away from it.
Or that somebody else can do a better job than we can in creating something than we can ourselves.
Yeah, so first and foremost, before we even go into the steps, is just realizing again that a business and a service that you could potentially provide to somebody else is something that you just create. It doesn't have to be anything that's overwhelming or anything that you think is what's the word that I'm trying to find? Intimidating. That's it. I think for us, when we started our businesses, we were intimidated at first. We were really scared because we thought that it was this big thing, that we weren't this uphill battle, but really it was just all in our minds.
Yeah, the idea I think we have in our mind is the fact that we need to go out and do something that's worth $100,000 right now.
True.
Instead of looking at the $1,000 that we can use right now to put ourselves in a position to get that down the road.
Yeah, true.
And that's exactly what compound interest is all about, is taking the beginning steps, taking the first steps to taking action, so that down the road, all the hard work builds up and compounds on itself, so that you can then have the $100,000 or $500,000 in the future.
Yeah, we're talking about compound interest in two different ways, from a money standpoint and also from whatever business or side hustle that you will create. Those efforts will compound themselves so that it will be passive enough for you to step away from maybe corporate America or have the time that you need with your family.
Yeah. Now, the very first thing you should take into consideration, if I had $1,000, what's the very first thing I would do is take care of my debt. Third-party debt or consumer debt, because you can't make money or keep money if you're constantly giving it away.
Yes.
That really hurts your mission or goal to earn more money.
Yeah, that is true. And from a perspective of, if you are sending money every single month to any financial institution, you are robbing your opportunity to create cash flow for yourself, because that money is already assigned to someone else before you even get paid. So we definitely agree that if you are trying to create some sort of financial freedom or some financial plan for yourself, you got to get rid of your consumer debt. And I say consumer debt specifically because a lot of people leverage financing for cash flow opportunities, and that's fine. We're talking about consumer debt. So any credit cards, any car notes, things of that nature. If you have a mortgage, just pay the mortgage. Don't overpay on the mortgage, because you could be using those funds to create cash flow in other ways for you that will bring money back to your house.
Yeah, and the nice thing about consumer debt, or not the nice thing, but the thing when it comes to consumer debt, is we're creating compound interest for someone else.
Yes,
money that
we're
we
paying
can
it out.
Money that we can be using for ourselves. And when you think about a credit card debt that you have, the longer that credit card is outstanding for, the more interest you pay. So let's take the fact that you may owe $1,000 on a credit card, but you're paying the minimum payment for the next 80, 90 months.
Yeah.
That's what, $15, but that adds up over that next 80, 90 months to double what the principal is. So that's $1,000 extra that you just gave away without even realizing it. It's the small bites that interest and consumer debt takes out of our pocket that we don't take into consideration because it's such a small number.
Yeah, we overlook the small numbers, but those small numbers add up.
Yeah, very much so.
So like we said, step number one, get rid of your consumer debt. We realize that if you only have $1,000, you may be in more debt than that, but the point is to start wiping it out. Create a plan in place where you're knocking off maybe the item that has the highest interest. You're knocking that off as fast as you can, and then you're rolling over that minimum payment to the next debt so that you can use that minimum payment to knock down the next debt and be as aggressive as possible.
Yeah, do the Dave Ramsey thing, the debt snowball.
Yeah, exactly. The debt snowball, because we did it. And we would never tell you to do something that we haven't done ourselves.
Yeah, the very first thing that we did, the very first thing that we wanted to do with our banking system that we created for ourselves, because we use life insurance policies to get out of debt, was, of course, to get out of debt.
Yes.
That's the very first thing that we did, so that we can start getting those interest payments redirected back to ourselves. But before we get into that, after you get out of debt, what's the next thing you should do?
The next thing that we think you should do is start a side hustle. And the side hustle can be maybe a business that you start, or maybe just a mom and pop thing that you do out of your garage. Whatever it is, we want you to go find a way to make some more money. And that's going to be in addition to your number one source of income. And the side hustle, hence.
Side hustle is kind of like toe dipping into different opportunities that you can think of to make money.
Yeah, now you're going to be doing this side hustle at the same time you're going to be paying down your debts, making sure that you're not waiting until you're debt free to start the side hustle. So just making sure that we clarify that. So create some sort of side hustle. Are you a carpenter? Can you now make tables out of your garage? Are you a chef and maybe can sell recipes and things like that? We want you to start leveraging your current knowledge and your expertise to make money.
Right.
And you're going to leverage that money that's now coming into your household as a way to create the compound interest that you need so that you can start earning that $100,000 and more, because you're just recycling the money that you're getting from your business or that side hustle and putting it in a place where that money is working for you.
Yeah, and when we talk about side hustles, think of it kind of like passively.
Yes.
What can you do? How can you monetize your knowledge? You personally, not giving your money away to somebody else, hoping that they'll do a better job than you. What can you think of in your own mind that can create some type of passive income, a side hustle that generates passive income for you?
Yes. Now, to clarify, when we're talking about passive income versus active income, because right now many of you may be working active income, meaning you're trading time for money. You're going into an office and trading your time for money. That is not passive income. Passive. Yeah, that's active income. So we're talking about from a passive standpoint. I mentioned being a carpenter. If you're a carpenter, it's not passive for you to make tables in your garage. But what might be passive is for you to create a tutorial video on how somebody can create a table or do some carpentry work. And that one asset that you just created can be recycled time and time and time and time again. That one effort is now being recycled, and now you're working passively.
Right.
So that's a good point that Darius said. If you're doing a side hustle, you need to think about it from a passive standpoint, because we know so many people that create side hustles and they now have two active incomes where you have to, do whatever you need to do for your 9 to 5. And then, at night you're doing something else passive, and that's taking time away from your family.
That's exhausting also.
Who wants to do that?
Yeah, you make money from it, but it's also exhausting. It's also kind of the thing you have to think about when it comes to passive income versus active income is active income also has a detriment to your health, because you have to physically exert energy in order to produce it, or it's different stress levels.
Yes.
When you're able to make money passively, or you do something one time and then it's able to repeat itself, then you put yourself in a really good position so that you don't have to worry about the stress.
Yeah. And one thing to think about this, for me, I know that this was a hard pill to swallow, because I was always taught that you need to work hard, and work hard means you're putting in hours, and you're dedicated, and you're doing everything that you need to do because you're putting in time. So when we started earning passive income, I felt a little weird, to be honest, because I
felt great.
That's funny. Yes, Darius was loving it. I was loving it too, but subconsciously in the back of my mind, I felt like I wasn't working hard enough. I don't know if those of you can relate, because I was taught that you got to work hard, and working hard is active income and not from a passive standpoint. Not to say that we're not working hard passively. I hope that I'm not like,
No, because,
you know what I mean?
Yeah, because on the other end, I was taught to measure twice or three times and cut once.
Yeah. Yeah.
So I think that just goes to show like we all have different experiences that we've had throughout our lives that cause us to create the things that we create.
Yes.
So one thing you want to do is take that into consideration. Am I doing something because it's comfortable?
Yes.
Because I feel like it's gonna do well, or that I do my due diligence and understand, okay, in the future, will this be something that I want to continue doing?
Yeah.
In the future, will I be able to maintain doing this, day in and day out?
Absolutely. Yeah, because I think for me, when I looked at the whole day, I was used to working from 9 to 5. And when you work from 9 to 5, really, when you're working a job, it doesn't take you 8 hours to get your work done.
No, it doesn't.
However, you're just programmed to realize that, oh, I have 8 hours to be working. And when we started our own businesses, I always felt like I had to work within these specific time frames that I was programmed to believe, and not realize that, hey, I can be productive from 9 to 12 and have the whole rest of the day available, because it only took me really 3 hours to do what I needed to do, or even an hour a day. You know what I mean? So really understanding that programming. Maybe you're watching this video and you can attest to some of the things that I was saying, or maybe you were like Darius. So what are some of the things that you can start monetizing that will allow you to work passively? Again, trying to do like something 1 or 2 times, and that it will live on forever for you.
Yeah, and then for me, like my day-to-day job, what I would do is I would work probably 2 hours out of the 8-hour day, and the rest of the time I'd be on YouTube. So I think that's something else that kind of went into the way we started to operate our business, because out of an 8-hour day, I'll be productive 2 hours.
Yeah.
So that's 25% of the time. And then next thing, I'm learning about different techniques and stuff on YouTube.
Yeah, I'm real talk. I have some coworkers that got master's degrees while at work. Because it just doesn't take you that much time.
Right.
So anyways, going back to point number 2 is passive income. Create some sort of side hustle that will allow you to work passively. And that has small overhead, because that's the other thing that you need to take into consideration is we're not telling you to go buy, a ton of stuff that now this business is becoming expensive. We're talking about what can you leverage within your household? Again, what can you knowledge within your brain that you can monetize to make money?
Yeah, and the most important thing about compound interest is to get started right now.
Yes.
Like, don't wait until you feel like you have, the perfect idea. I need to, draw this thing out. I need to go and make sure I have a website. I need to make sure that I have business cards.
Oh, we do.
Just get started right now, because the longer it takes for you to get started, the longer it'll take for you to build up that $100,000 at the end of this time frame, because it doesn't take long for the money to build on top of each other, on top of itself, once you get started.
Yeah, I'm so glad you said that point, because I know for us, we probably didn't start a million opportunities because we didn't have the right business cards or websites in play, because we felt like we weren't legit until we had those things. So don't get tripped up on that, because really at the end of the day, nobody really uses business cards anyway. No. And everyone's on social media. Social media is free. You don't even need a website. Now, one thing, the main thing that we hope that you get from this video is when you start your passive income and you have cash flow coming in, you need to put that money aside. You need to put that money aside. So you're going to take a little bit of that money to use to reinvest back in your business, maybe give you some more resources and whatnot you need to sustain the business, and the rest of it you need to put up. And when we say put up, you need to put it in a place where you can earn that compound interest, so that money can be working for you.
All while still having access to it, so you can put it back into your business.
Amen. Exactly. And the reason why we want to really, really talk about this point is because we find so many business owners, the minute they get any money in their business, it's spent, because we're either celebrating because we made money in our business, or our business is costing us too much to stay in operation. So you have to be good with your money from a business standpoint, personally, and from a business standpoint.
Professionally.
We hope that professionally, we hope that you really think about your opportunities to make more money, because we're assuming that you still have number one income. Your income is still coming in, and the side hustle is really what's going to help you maybe walk away from your job, or help you with your your retirement or, whatever financial goals that you're trying to accomplish. So you need to have a plan for that money. This isn't blow money.
Yeah. So just before we move on to the next point, leave us a comment below on some of the different side hustles that you're currently doing or have ideas in doing in the future so that you can start earning compound interest just by starting right now.
Exactly. And if you all want to join the Wealth Nation, click on the link below to join us. We would love to serve you so that we can help you understand where you should put that money so you can earn that compound interest.
There you go. Now, the next point that we want to make is really, really, really important to kind of bring everything all home.
Yeah.
Is you need to invest in yourself.
Whew.
Educating yourself is one of the most important things that you can do. You can never learn enough. One thing that I learned from one of my engineering professors is that, you're always going to be learning.
Yes.
You're always going to be learning. There's always going to be changes that's made around us in our environment, in our economy that we're going to have to make adjustments to. So we have to educate ourselves so that we can put ourselves in a position so that we can change along with those adjustments.
We can be nimble.
Yes. That's exactly what you need.
That's exactly what we're doing. And you can't be prosperous. You can't build wealth until you educate yourself. And I think for us, that was the biggest game changer of understanding that we need to read every book that's probably ever been published, especially when it comes to money, so that we can understand what our options are and the ones that resonate the most with us. Because we had so many friends or families members telling us, oh, we need to do this, we need to do this, we need to do this, when really all of the options are amazing. But we also had to realize, what is the best option for us and for our family and what we want to do. And we wouldn't have been able to make those decisions if we didn't take the time to educate ourselves. So for us, I know if you've seen some of our videos, we started with Dave Ramsey. He really taught us about budgeting and just how to control your income because we had no idea.
And we still use some of those principles and even now with how we budget our money.
Exactly. And having steps and having goals. We never knew that we needed to have financial goals. We just knew that the goal was to pay the bills every month. Not like, what are you aspiring to do with your retirement? Or, do you want to make $1 million? And how do you go about doing that? So education, not only from a financial standpoint, but from a small business standpoint, figure out what is out there in the industry, what is out there in the marketplace that you can really hone in on based off of the skills and the knowledge that you currently possess.
Yeah. And I want to apologize to everyone out there who think that thought we were going to be creating this video to tell you specifically that you need to be investing in the index funds, specifically that you need to invest in real estate,
whatever
Bitcoin.
it is.
No, the thing is, you can make money from anything. Money is everything.
Yes.
So our knowledge that we have is money. Think about just monetizing your knowledge. And that can be anything in the world.
And that's typically the most powerful asset that we have is our knowledge. And it's the one that we can control the best. Because what we find, just since we're in the financial space, where people get in trouble is they get involved in financial investments that they have absolutely no control over, nor do they educate themselves to understand how to maximize their efforts. So that's why for us with this video, we want you to know that you are powerful enough, you are not knowledgeable enough to create your own source of cash flow, and you don't have to be dependent on other financial products in order for that to happen, or investments for that to happen, so that you can make that $1 million at the end of the day.
Yeah, absolutely. Because by all means, you can make $100,000 in the stock market.
Yes.
But I know me personally, I can't. Because I'm not familiar with the products and process. Now, I can absolutely give somebody money for them to do it for me. But who benefits the most when you give up control of your money? The person you give it to.
Yes.
What you're doing is you're just earning like the leftovers. And that's a lesson that we learned, a long time ago. When we give up our money, they earn all the interest and
the commissions
and things of that nature, but we're the ones taking all the risks. So take that in consideration when you think about what you want to use, what vehicle you want to use to earn that compound interest.
Yes.
Now, compound interest is interest on interest. In order for you to earn compound interest, you have to get started.
Absolutely.
You have to get started. And you can earn compound interest by putting yourself in a position where you can earn interest on multiple things at the same time.
So true. And that's why we say you need to start now. You need to start immediately, because one, you need to do it because of the financial goals that you want to set. Stop waiting until tomorrow. You need to start today. The next thing is when we talk about that side hustle or that business that you're going to start, like we said, you have to have a plan for that money. That money has to be set aside to reinvest back into the business and be set aside so that you can continue to accomplish the financial goals that you have set forth. You know, at no point are you ready to start spending this money until you get to a point where the cash flow is consistent and it makes sense to spend the money. That again, I can't harp on that enough, because I know we ran into that because again, we didn't know the information on how to properly manage business funds when we were first starting out.
Yeah. Now, one thing we talk about is using whole life insurance as a storage facility or as a savings account for ourselves.
Yes.
And when you're able to do that, you're able to take the cash value that's building up inside this whole life insurance policy, and you can take that cash and reinvest into whatever you want, or reinvest back into your business. Now, by doing that, this is called something like a corporate capital strategy, where you're financing your own business from your life insurance. Now, this is something that Fortune 500 companies do with the life insurance policies that these businesses have.
Yes.
Now, we can do the exact same thing on our own scale with our own personal whole life insurance policies.
Yeah, exactly. And
because just think about it, it's really hard to get a loan from the bank to invest in our business when you're starting. But if you create your own system, or own banking system, you don't have to ask permission from anyone on how you borrow this money or utilize this money within your business. So definitely take that into consideration, you know, when talking about earning or creating $100,000 in compound interest, because you have to be someplace, you have to store your money someplace where you consistently earn interest. And you can do that within a whole life insurance policy. Borrow the money from the insurance company and continue to earn interest, and invest it in your business and still earn interest.
Yeah.
That's how you earn compound interest from your banking system.
And it's also a passive play.
And it's a passive play.
Yeah, because we always talk about passive, because we want our money to work. We want our business to work, you know, independent from us. So that's why we say start with $1,000, invest in a business, a side hustle that you can do today or tomorrow so that you can start generating some cash for you. And then once your business generates that cash, then take that money and put it into a whole life insurance policy so that you can earn the compound interest. Your money can earn money passively for you, and you have the flexibility to borrow it when you need to or not. And on top of that, you have a death benefit should something happen to you and your family is covered. So this is a win in so many different ways to make sure that you are putting yourself in the right position from a financial standpoint.
Yeah, in a right position to pass on a system and windfall of cash.
Exactly. And who knows, this business that you might create might be a family business, might be a family affair. And if you set everything up systematically, like Darius said, it can just pass to the next generation or the next member of the family.
Yeah, because the nice thing about compound interest is it doesn't have to stop.
Oh, no, it doesn't.
It can continue going even when we're not here, as long as we put the right system in place to continue earning that compound interest, or so that we don't disturb the money when when things happen.
Yeah. So with everything that we talked about, let's recap, because again, we want to make sure that we're on the same page. So the first thing we said, you need to get rid of your consumer debt. Start immediately. Start with the highest interest that you are paying and work your way down. And you're just going to roll over the balances to the next account so that you can be more aggressive in paying off your debt.
Right, because that's money coming out of our pocket.
Yeah.
We want money to continue to come into our pocket.
Yeah, and we'll link this video here where we talked about how we paid off our debt with infinite banking, with whole life insurance, and we literally redirected $2,000 that was leaving our household back to us so that we could use for cash flow purposes. The second thing that we said is you need to start a business or a side hustle. You're going to do that simultaneously while you are paying off debt, because this whole thing is about starting today and accomplishing those financial goals as you possibly can. So what is the knowledge that you can leverage today that is valuable to the next person, where you can start selling a product product or a service from a passive standpoint.
Yeah. Now, even if you start a side hustle or start a business and that business fails, you've learned far more than what you've invested into that business because of the fact that you started something, it didn't work. Now you know why.
Yeah.
So really think about the things that you do. And there's always a lesson to be learned in every single thing that we do.
Absolutely. And then the third point, just wrapping it up.
The third point is to make sure you continue to educate yourself. Make sure you invest in yourself and your knowledge. The biggest asset that we have is our knowledge. So continue to pour into it so that it can it could benefit you.
And I'd say for knowledge, one of my favorite books is The 4-Hour Workweek by Tim Ferriss, because that really helped me understand how to leverage my time, how to be more strategic so that I can work as little as possible and get the biggest bang for my buck. So it's something that I totally recommend to those of you who are out there thinking of how you can monetize your side hustles or how you can be more efficient.
Yeah, and don't think you have to do it by yourself.
Yep.
Find partners to work with. Find people that have things to contribute to the cause that you don't necessarily have. The best thing you can do is build a team around you. So
service swap. You can totally do that. You know, I'll provide this service if you provide the other, and now you're not even exchanging any monetary funds because sometimes you don't have that when you're first starting, but you can swap services and be able to serve people at the same time. It's all a barter system, right? Value.
Yep. So the moral of the story is when we started our system, we didn't have two nickels to rub together. Now we're on the back end. Well, not even the back end. I think we're still just starting. But
we're just getting started, Darius.
But what we've been able to learn through this process is the fact that we've made a ton of mistakes, and we want to share with you the fact that you don't necessarily have to do that. You're sitting on a gold mine just with the knowledge that you have. It's definitely something that you have that can benefit somebody else.
Absolutely. And to that moral of the story, we have taken $1,000 and turned that into 100,000 times multiples. Won't tell you exactly how much, but we have done that again. So if anything, we're always just sharing our story and how we can do this and how you can do this, because it's important for you to know this information. It is attainable. You can do this. You just have to surround yourself with people who are telling you that you can do this, and will build you up so that you can continue to empower yourself.
When it comes to compound interest, we are really, really big on this when it comes to infinite banking. But here's the thing. Compound interest works the back end. So a lot of times we put all of our faith in compound interest when it's not necessarily the best thing for us at this very moment.
Exactly. Sometimes we just have the preconceived notion that we just need to let our money sit. And that's not at all what we talk about on the Wealth Nation channel. It is never, ever, ever about letting your money sit and you not doing anything, because this day and age, we understand that money has to keep moving in order for you to generate cash flow. So in this video, we just want to continue to hit home the importance of compound interest, but making sure that you're not just relying on that, because you need to create means of cash flow in order to sustain your retirement, in order to sustain your lifestyle, or just accomplish whatever your financial goals are.
Now, that's the thing right there. You said retirement. A lot of times what we do, and I even say what I did, was we put all of our money aside for retirement. We put it into our 401ks. We put it into our retirement accounts that's invested in the stock market. And we say that in 30 years, this is going to be ripe for the picking. And it's going to take care of our retirement moving forward.
How do we do that? How does that even make sense?
Well, it makes sense. It makes sense because it's easy. It's easy to give up control of our funds. It's easy to set that aside because that's just what we've been conditioned to do.
And it's easy because everyone else is doing it.
Right. Now, what we should be focused on is the cash flow aspect of it. Compound interest is amazing. We earn compound interest in our life insurance policy, but that's not the only thing that we're doing in order to make sure that we are good moving forward.
Absolutely. So again, in today's video, we just want to break down how this whole process works, making sure that we're on the same page, because again, you know, these are things that we say all the time on our channel, is just, it's not all about the policy when we're talking about infinite banking. The policy is just a tool for us to park our funds, but really the big picture, the things that we need to be thinking about is, what are we doing with the cash? And so the whole reason why we say compound interest is failing you is because, again, if you're only thinking about my money inside the policy and it's going to sit, then we're doing ourselves a disservice.
Yeah. And, my inspiration for this is the fact that my mother is retiring. She wants to retire this year. Now, we are currently in a recession. Is now really a good time to retire if your retirement is the only thing that you're thinking about, because you just lost a lot of money when it comes to the stock market, and it may not be the best time for you. So what I think about when it comes to retirement or compounding is I'm thinking about my mom. My mom set aside funds every single check faithfully for 30 years. She set aside the taxes. She forgo paying taxes on it so she can pay it when she's retired. Hopefully she's in a lower income bracket. Now, one thing, just to kind of trail off is the fact that we're getting ready to have another stimulus check, right? Possibly.
We're on the
we'll
street.
Have another stimulus check. Now, how are we going to pay all these bills unless something happens with taxes? Who knows? We don't know. But the thing is, there's no crystal ball. Like, we don't know how much taxes we're going to have to pay in the future. So why risk it?
Yeah, and it really just breaks down to understanding what you're doing with your money, because like Darius was saying, with retirement or even with investing, you need to know what's going on, because all of the risk really lies on the individual, right? There really isn't any risk until the individual gets involved. And it's really based off of your knowledge level to determine how successful you're going to be in your retirement or in investing. I hope you guys hear me on that. So if anything, what we're talking about with retirement, we're taught to park our money for 30 years, right? Put it up pre-tax. You don't have to pay any tax on this money. And then it's going to somehow miraculously come, because it's going to be also invested in the market, possibly, depending on whatever product you're using. And then after the 30 years is done, now you're going to be taxed on all of that money that you have been saving for 30 years. Congratulations. Welcome to retirement.
Yeah. Now, here's the skinny on compound interest is the fact that the money has to sit. Money never just sits there. Like, even when we put in the stock market, when we put it into our bank accounts, our savings accounts, and we earn interest on it, when we talk about putting money on in our life insurance policies, we earn compound interest. But in order for us to earn compound interest, that money has to be moving. Somebody has to be managing that money so that we can earn more money.
Creating the interest.
So that is great. That's great for us, but we can't rely on that. That's just a perk.
Exactly. Yeah. So again, going back to just really understanding the compound interest factor of it, true compound interest has to sit in order for it to work. So if you have your money in a savings account and you pull from the savings account, the compound interest is now you're starting that all over. If you have money in investments and you're getting some sort of compounding, the minute you touch it, the compounding is done. So the reason why we like using whole life insurance, for example, is because when you put your money into a policy, it is going to earn a guaranteed compound interest rate. The difference,
as long as you don't touch it.
Withdraw. As long as
you don't withdraw it.
Exactly what I was getting to. Exactly. So as long as you don't withdraw the funds, meaning take the funds out of the policy and you get loans against your policy, your money is going to continue to compound for you, regardless if you use it or not. So it's an amazing, amazing feature to have a whole life insurance policy that is earning compound interest for you, so that you can keep your money in a place that's going to continue to generate returns.
Now, in the meantime, what you're going to be doing is earning cash flow.
Yes.
Cash flow is the name of the game. When we think about what the banks are doing, what are they doing? They're trying to earn cash flow. The reason why we get loans and the reason why we go into debt, why the banks allow us to go into debt, is so that they can create cash flow. Cash flow. cash flow.
And if you didn't hear him, cash flow. So as we have parked our money snugly into a whole life insurance policy, again, the question now becomes, what are we doing with the funds? And the funds we should be getting loans and obtaining interest in other vehicles by either investing in intellectual property, whatever it is that you're doing, you need to be creating cash flow. Because like the banks, like Darius said, let's break this down again, right? We're all about becoming our own bank or becoming our own source of financing. So where is the blueprint for this information? Right down the street on every corner. And I'm referring to a bank. So how do they keep their doors open? Banks keep their doors open in two ways, really. Deposits, because every time you get paid, you're putting money into the bank's hands, literally giving them an unsecured loan. I don't know if you knew that or not. A deposit is an unsecured loan. And then the second part of it is a loan. How many of us have credit cards, car loans, mortgages, personal loans, whatever the case may be? The banks are creating cash flow by saying, hey, we're sitting on all these deposits and not everybody is coming to collect on this money, so we can lend it to you with a little bit of interest and you're going to pay us back. That's exactly how they work. So why shouldn't you work the same way?
Now, how we should really work is we should be creating cash flow through the things that we are good at, because a lot of people think of cash flow as investing in the stock market or giving someone else our money in hopes that they can do something with it. What we should really be considering for cash flow is, what can we do ourselves?
Yes.
What type of activity can we perform for someone else to get that return of value so that we can create cash flow for ourselves?
Exactly.
Because the whole idea of everything that we do is control. Whoever has control, they're able to make the rules. Let's think about when we put money in our checking account. We just went to the bank today and we can't get access to our own money because we want too much of it. What sense does that make?
Not at all.
Not at all.
It continues to prove that they don't have the funds on hand.
Right. So when it comes to thinking about creative ideas to generate cash flow, you have to look within yourself and take inventory of what it is that you do. Because at the end of the day, it does not take money to make money. The best opportunity you have if you don't have any money, because you can create it. It takes creativity to make money. What you have to do is think of a way to add value to someone so that in return for the value that you add, you are able to earn money. So let's really think about the creativity that we can provide, because this is something that we need collectively, is for you to be creative.
Amen to that. So go ahead, just because of this knowledge that Darius is dropping, go ahead and give us a thumbs up on this video today if you're with us. And again, I just want to continue to build on what Darius is saying, because in this day and age, so many people have lost their jobs. So many people have lost all of their resources. So really at this time, we got to get creative, y'all. We got to roll our sleeves up. We got to figure out what knowledge do we possess that can be monetized. Because like Darius said, it doesn't take money to make money. No. And whoever told you that is lying, because it takes creativity and it takes resourcefulness to make money. Think of all the people that are out there in the street flipping a buck. They probably didn't start with anything, as you hear with a lot of business owners. A lot of successful business owners were homeless, didn't know how they were going to get started.
Working out of their garage,
Amazon, Apple, things like that. So don't ever sit here and assume that you're down and out because you don't have the money to get started.
As long as you have a brain working in between these ears, you have opportunity. Because we live in America. There's tons of opportunities surrounding us. The only thing we have to do is just look and see what other successful people are doing.
Thank you, Patrick. Thumbs up, everyone. Yeah, so it's really, again, kind of going back into this. We're talking about compound interest. There's two pieces of this, right? So we need to put our money in a place where it's going to keep up with inflation. If we're assuming inflation is like 2%, right? So if our money is going to keep up with inflation inside a policy, now we have bonus points available because we can continue to earn the compound interest inside a policy as long as we get a loan. And now we can leverage that money to make money. So that's why today we're talking about, what are you doing besides just sitting on your cash? Because a nest egg is no longer the sexy thing, right? A nest egg was something that our parents strove for, which was retiring with a stack of cash. And right now, that's not ideal, because what happens? Think about this. This is very visual. You know, you go 30 years, I talk with my hands a lot, right? So you go 30 years and you build up this whole stack of cash. Now you're in your 60s, maybe you're in your 70s, who knows when you retired. And every single month, what are you doing? You're depleting that stack of cash, right? Because you're not creating what? Cash flow. Right? Now, every single year, that's why these retirees are so worried about outliving their retirement. Why? Because they're not creating cash flow, because they're depleting their nest egg. They spent their entire life saving all of this money, and now it's gone.
Yeah, and let's think about 30 years ago, what was inflation like? Was taking into consideration inflation.
Yep.
Because if every year, let's say inflation is 1.5%, 2%, every single year we're losing 2% value on every single dollar. Yeah. So not only do we have to worry about inflation, we have to worry about the fact that every time we go and spend our money for our lifestyle, we're depleting it.
Yes.
Without it being replaced.
You're
so
right.
Who wants that stress on them?
Not me.
No.
Mm-mm.
But we have the ability right now to start thinking about how we can generate opportunities for cash flow. And you know what? For us, the first thing we thought about when we initially got started, which is why we were involved with real estate, was the fact that, okay, if the most successful people are doing real estate, then we should be doing it.
Yes.
But what we learned is that wasn't a calling to us. Mm-hmm. You have to find out what's calling to you.
Yeah.
Because the best opportunity you have to create cash flow is something that you're passionate about and something that gives you the ability to create value for someone else.
Amen. Because you never want it to be a chore, because at the end of the day, you just bought yourself another job. So it is very important that whatever you are investing in or whatever you are into, in order to create cash flow, in addition to the compound interest that you're earning, is something that you enjoy, mm-hmm. or something that you have an interest in. Because again, like I talked about earlier, the risk comes involved with the individual. So if you are not into researching whatever it is that you're doing, or really understand the investments and how money should be moving within the investments, you are the risk, right? It's not the investment, it's yourself, because you don't understand how this investment or how this cash flow should be played. So that's why we always say, get involved with something that you have knowledge in. And also think about this. This is something that we talked to an individual about. He's spending all of this time educating himself on a subject that he knows nothing about, but he has all of this amazing talent in the music industry. And he can teach, he can play, I think it's like 6 instruments or something, and yet he's sitting here trying to learn about real estate. And we're like, boy, if you don't go teach some music lessons, if you don't create an online course and teach people how to teach the piano, everyone is home these days. I'm sure the kids need some help with some piano lessons. The parents would love it. You are sitting on a gold mine of knowledge, but we just underestimate the information that we have inside our brains. So that's why we're saying, think about the things that you currently possess. What is the knowledge that you have right now? Because if you're not monetizing this knowledge right now, you're probably wasting your time, because you're going to try to study something that you don't know, when really we have all been paid for our knowledge that we currently possess. So we are challenging you. I'm challenging you guys. Stop studying stuff you don't know, and just yet initially, right? I can hear the comments now. Well, let me make sure I clarify what I'm saying. Right now, today, in order for you to be resourceful, use the information that is inside your brain right now to create cash flow. And then build on it. Go study a different subject. Go learn a little bit more. But what I'm saying right now is, if you need money, you better figure out what you know right now and go monetize it, because that's what you can start doing and take action on today, right?
Yeah, what's 10 times worse than wasting time is, what's 10 times worse than wasting money is wasting time. Mm-hmm. Because it's something that we can never get back, no matter what we do.
Exactly. Yeah, so I was moved to say that because we just have so many people that we come in contact with that are talking about all of these plans that they have. And we just know that they're sitting on amazing information that is so valuable to everyone these days. We all have gifts, we all have talents, and sometimes we just don't realize how important it is to the next person.
Yeah. Yeah, absolutely. Because right now, every single person on here is watching us through some type of device that they paid for through a service that they provided for someone else. So let's think about how you can maximize that or focus on that so that you can create more of it for yourself. Because, really at the end of the day, small businesses are on a decline. That means that we are dependent upon these larger corporations in order to help us maintain the lifestyle that we have. And what that's doing is that's stifling our creativity, because what we do is we become a specialist in something that benefits the company more than it benefits us.
True.
And the reason why I know that, the reason why I feel so deeply about this is because in the occupation that I had as an engineer, my job was to understand the value of a person to how much it is costing the company. In every single company that I work for, we value people at 20% of the value that they provide for the company. So we're literally paying people 5 times less than what they're worth. Now, if you can do this on your own, you automatically start earning 5 times more than what you're currently making. And for me to see that so many times, it was one of the reasons why Carmen and I, why we decided to take the chance and start working for ourselves. And right now it seems hard. It's hard to fathom, doing something on your own, but you have to do that. You have to, because people are looking for the services that you provide. People can connect with you more than they connect with a large company.
Yep.
Right.
Yep. And it's so true, because the other part of it is when you're thinking about someone else controlling your income potential, that can make you a little upset, can it? Yeah. When you think about that. And so with Darius, with the experience that he had, it was really amazing for him to come home and, vent and tell me some of the things that he had encountered every day, and realizing like, wow, the bottom line is real when it comes to companies. Yeah. And we don't realize it because we're so happy to have that job because it's going to pay us every 2 weeks.
Or because it's some large brand, it's some well-known brand. Like, who cares?
Yeah. But again, it's just that the things that we've been taught in the programming that we have. So don't ever let anyone control your income potential. Don't ever let anyone stifle what you can bring home to your family, because really it's in your hands. You have the ability to make as much money as you ever can imagine, as long as you're willing to put in the time and the effort.
Right. And back to the whole title of this video is the fact that, compound interest, you earn compound interest. It works the best on the back end. So compound interest works the best after 30 years, for example.
Meaning it takes time for the compound interest to build up. So that's why we keep saying, whenever you get a policy, you don't just focus on the numbers and focus on the cash value that you see in front of you, because that's going to happen regardless. It's on autopilot. What we need to be focusing on is, what are we doing with our banking system? What are we doing to create cash flow? What are we doing to increase our income potential? Like Darius is saying, we need to start strategizing and really get in the driver's seat of understanding how we are going to solidify that retirement, if you choose to retire, or just your everyday lives. Because how many people would be happy with another $500 a month, another $1,000 a month? We're not talking about huge numbers here, but we're just talking about a lifestyle change and a little switch in that mind of understanding how you can literally bring money back to your household without even realizing that you had the ability to do so in the first place.
Yeah, and it doesn't. And let's think about this: if you can make $1, you can make $1 million. Honestly, if you can figure out a way to make $1, then you can make $1 million.
Yes, absolutely.
The whole system that we are plugged into is designed to make us dependent.
Yeah.
Don't let yourself be dependent on someone else for a paycheck. Don't let yourself be dependent on someone to grow your money for you. Don't be dependent.
Yeah. Yeah, and I'm so glad that, again, powerful nuggets coming from Mr. Britt over here. It's really powerful. You know, whatever you can dream of, it can happen. So if you know that you can go out and make a buck yourself, go make your own hard-earned dollar, you can do that 10, 20 times over. So it's really important. Again, start challenging yourself. Start thinking about what are the ways in which I can gain cash flow. What is the knowledge that I currently possess today that can serve someone else?
Mm-hmm.
You know, it could be gardening, it could be, like I said, music, it could be financial education,
It could be cooking.
we're sitting here talking to YouTube live about the information that we know about money. And it's serving people because people are looking for this information. So the minute that you can tap into that skill or that piece of knowledge that you have and know that it can serve others, it's going to change your life.
Yeah. And just out of the corner of my eye, I saw a question about, does this plan have fixed equity index? We're not talking about any plans. What we're talking about is you generating cash flow from your own thinking, your own creativity.
Yeah, but just to clarify, if you're talking about the policy that there is no investing, it's just a simple whole life insurance policy with high cash value that provides a guaranteed return and doesn't mimic the stock market.
And it provides us compound interest, and it's great. But the point that we're trying to make in this video is the fact that don't just let that be the end all be all. That's a perk.
Mm-hmm.
That's not going to save us. What's
Yes.
going to save us is cash flow.
Yes.
Utilizing those funds to generate cash flow for ourselves. Best investment you can ever make is an investment in yourself so that you can use that knowledge to generate cash flow.
Right, because the whole name of the game is infinite banking. We didn't call it the infinite policy. We called it infinite banking. Not we, Nelson Nash, for example. So it's all about banking. You know, what are you doing with your banking needs? Sometimes people just get caught up in, well, I don't have debt, so what do I do with my policy? Well, I don't have any investments, so what do I do with my policy? So again, what is banking about? And banking is about every single time you swipe for a transaction. I don't care if you're buying Starbucks or if you're buying the next best investment. It's all about what are those transactions and how can you control some of those transactions within your own system. Mm-hmm. So it doesn't matter if it's debt, it doesn't matter if it's creating cash flow, whatever it is, it's transactions. You should start thinking about all of the transactions that you're making on a monthly and an annual basis and try to figure out how you can start controlling some more of those transactions within your own household.
Yeah, and if you don't have any debt, you just have your money sitting in your bank account, then congratulations, the banks love you because you are funding their cash flow that they're generating by providing debt to someone else.
That is so true. If you guys are still with us, go ahead and hit that thumbs up button. Thank you so much for hanging out with us. We're going to take some of the questions in just a moment. But if anything, again, we just want to make sure that we hit home the point today, which was the title of the video is basically compound interest is failing you. Mm-hmm. And we say this kind of cheeky to say in the sense of if you're just relying on putting your money up on a shelf and not doing anything with it,
you missed the point.
you missed the point, because what we're talking about is using a tool that provides compound interest so that you can then leverage that tool to create cash flow.
Yeah, and we're doing the exact same thing the banks are doing. When it comes to learning or understanding anything that's related to finance, ask yourself, what would the banks do? Mm-hmm. Now, you have your money sitting inside your bank account. And the banks take that money, your money, and they lend it to somebody else for some type of debt.
Exactly.
And then they earn cash flow on that. You don't earn any of it. Now we're doing the same thing when it comes to a life insurance policy. We have our money earning interest inside of our life insurance policy, and we borrow from the life insurance company to use our funds for cash flow.
Mm-hmm. It's so true. All right. So with that being said, let's jump into some of the questions here. We just love the engagement that we get from the live. So thank you guys again for hanging out with us. And also, if you are new to the Wealth Nation channel, in the description below, you are actually going to see a link to our masterclass. So definitely make sure that you check that out if you haven't done so already, because it's going to break down the infinite banking concept for you, show you how you can use the money inside the policy to apply into your lifestyle, and then just figuring out, what do you do from there? So go ahead and check out that masterclass so that you can continue to educate yourself on what we're talking about.
So for eye candy, You're both under 59 and a half, way under 59 and a half. I just had a birthday, but still way under 59 and a half. Did you get your money out of your 401k or just stop funding it? Well, both. Yeah, we haven't had a 401k in years because once we realized the game, then we started using the game in our favor.
Now, again, we are not tax professionals or retirement professionals, so you need to consult with your professional. Putting that disclaimer out there.
That's just what we did.
Yeah, we're just telling you what we did. I withdrew the funds out of my 401k when I was in between switching employers, and we just used the funds to start a policy at that time. Yeah. And then with the other account, we just stopped contributing to it and used those funds to also apply to a policy. Yep. So just to share with that, thank you guys again for the love. Good evening. Hello. We think you all are the bomb as well. Okay, so let's see. I pray all is well. Thank you so much, everyone. Cash flow is king. Creative minds, thumbs up. Okay, what else?
Patrick Joyner, I have interest in financial stability and retirement. Yes, that is very important. If you have an interest in financial stability and you're good at it, then just start talking to people. Start spreading your knowledge and what you know and the creativity that you're using to put yourself in a better financial position.
Why not?
Thanks a lot. I need to speak to my current employer about a raise. Yes.
You should. Thanks a lot. Absolutely. Okay. What bank not letting you access the funds today? What do you suggest as an alternative way to store your income? So iCandy, for example, we went to the bank to get, let's just call it $5,000. Again, not a lot of money in the grand scheme of things. We're not talking about millions of dollars, but we were told we could get half today and half in the next few business days. So, when you're a business owner and you need to fund expenses, you need to get some stuff done, and the bank is telling you, sorry, we have to order the money. That is a little frustrating when you know that the money is right there in the bank account.
If I got $50K in my account and I want 20 of it, I should be able to get it right then.
Or you should be able to get all of it.
Yeah, all of it, yeah.
And not be told, sorry, we have to order money. So, and this is just with one particular bank. We've run into this before with other banks. It is what it is, ladies and gentlemen, but we're sharing this with you because it's important for you to understand that the banks don't have the money on hand. Just because that you log into your bank account and you see the money there doesn't mean that it's next door or on the corner waiting for you. Because why? The banks are constantly moving money, and they're not just going to let the money sit in the bank because it's costing them money if they sat on everyone's deposits. So again, check out our masterclass because we talk about that even in more detail about how the banks work.
Yeah, the same rules that apply to us as far as like having our money sitting and not keeping up with inflation. Banks really understand that. That's why they have to keep their money in motion, and it kind of follows the sun around the world.
Yes. So other alternatives for parking your money just happens to be a whole life insurance policy. Go figure. So we use whole life insurance policies. Of course, we can't replace the banks just yet. So we still do have checkings and savings accounts. But just so you know, maybe in the future, we will have a solution.
Let's see. What's going on, Robert Raymond? I can't pronounce the name. Kimya. When you borrow against your policy, does it show up on your credit report? No, it doesn't. It doesn't show up at all. Your policy is a personal contract. Well, with the mutual insurance company, it's a personal contract between you and the insurance company. So that's nobody's business how much money you have or what you do with it. So when you borrow money, nobody knows about it, just you.
Exactly. So Mr. Randall saying he has an appointment with us to meet with one of our agents, our brother from another mother. He is going to take great care of you. Okay, let's see. What else? I'm new. I've watched the master's class. Great stuff. Thank you so much. Is there a point to where you no longer have to pay a premium? Good question. Well, let me ask you this, Mr. Randall. Jay, do you ever want to stop receiving deposits? Do you ever want to stop receiving deposits into your bank?
Yeah, let's hypothetically, you have a bank. You own a bank.
Let's think about that.
You own a bank. When do you want to stop receiving deposits?
No. And I'm asking a serious question. This is for everybody here, because what I'm asking this question so that we can think about our premium payments differently than how we're used to thinking about them. Right. And the reason why I'm saying that is, again, when we think about premium payments, we're thinking about a payment. We're thinking about a withdrawal from our account. We're thinking about an obligation that we have to pay. Right. And instead, what we're doing is we're creating a banking system where the more we fund it, the more money is accumulated for us to be able to then leverage to do whatever we want to do. So I'm answering your question with a question is, when do you want to stop paying?
Now, what you said is interesting, because one of the questions we have from Westside Transport is the 1090 versus going with the 4060. And it says that, well, you know, we favor the 4060s.
Yeah.
And one of the examples we did in our Patreon page, where we actually had a whole set time where we talked about this, is real quick, 40-60 split, 1090 splits. Is basically you're doing all the work with your cash versus you allowing the insurance company to do the work with their interests. So when it comes to a 40-60 split, you have to look at how much money you have at a certain period of time. So in the example we did is we had $180,000, which we funded the policy up front because we were doing the 1090 splits. And then we had where we had the cash value of $180,000 at the end of like 30 years. Now, the thing is, at the time that we had the $180,000 on the 40-60 split, we put in a lot less money. So I know that was really quick. Check out the Patreon page where we discuss this in detail, because it'll give you a lot of perspective on what that looks like, because we actually use one of our policies.
Yeah, we put them side by side and just showing you how much you're putting in on each one and what the ratios are. So again, it's kind of up to you. So we favor the 40-60 split because we don't have to do as much heavy lifting. We don't have to inject as much cash into the policy because, again, the policy is going to do its thing regardless.
Yeah, what's really important is what we do to create cash flow.
And going back to Mr. J, if you haven't figured out that answer yet, basically the answer was you never want to stop paying. I would assume you don't want to stop paying your policy because the more money that you put into it, the more cash that you have available.
Yep.
So really good question. So that's why sometimes when you look at like 10 pay or 20 pay policies, if you see those, you have to stop paying after 10 years. You have to stop paying after 20 years. You can no longer add any more funds. So what does that mean for your banking system?
I personally really like a 10 pay policy if somebody else is paying it.
Of course, if someone else is paying it, they can take it.
Yeah, put $100,000 into a 10 pay policy for me that I benefit for the next 10 years, and I get all the cash value and the growth. Sign me up.
That's nice. Can I contribute any amount to get started with a whole life insurance policy?
It depends on your age and health.
Well, and any amount that you can afford, right? So don't just write $1 million check and then not show up next year. So make sure that it's an amount that you can afford consistently on a consistent annual basis.
Yeah.
And again, the insurance company is a business. They're not going to argue with you if you cut them a large check. Okay, let's see what else. I have spoken to Mass Mutual because of you guys I've spoken to a Mass Mutual agent because of you guys. Great. Good luck with your policy, and hopefully you're able to get that started. Can you direct deposit to a policy? No, you can't direct deposit, but you can create automatic payments. Yeah. Just to clarify. Hey guys, I signed up with you a few months ago. I came on 12K a year of policy. Question is, how do I circulate my cash flow through IBC when I'm only getting half out? Good question. Okay, so if you started a policy with 12K and you're saying you only have half out, what are you doing with the half? So that's kind of what we're talking about today, is you always have to circulate the money, because when you buy a policy, there are two parts of this policy. There is the cost of insurance, and then there is the cash value. So with you, when it comes to the cash value, is do you have any financial obligations that you can take over with the cash value that's inside of your policy? So debt could be one thing. If you don't have debt that you can take over, then what are some maybe bills that you could take over and redirect back to your policy? What are some investments or cash flow opportunities that you can start investing in order to bring some cash flow back to you? So it's all about just looking at your crystal ball, looking at your current economy inside your household, and determining, what am I going to do with this money so that it's not just sitting?
Dee, I'm using it as an emergency fund, but I invest in real estate and the stock market. Perfect. That's what you're using your funds for. Use your funds to help mitigate the risk when it comes to the stock market. Because if you lose it, you don't technically lose it. It's still earning you interest. You have the ability to replenish it. And real estate is also a great opportunity because when investing in real estate, that helps provide cash flow for you.
Yeah. So just making sure, Dee, that you are making your money come back to you, because that's the other thing about infinite banking is sometimes people just send the money out, but they don't bring it back. And that's another thing that can break your system, because we're all about recapturing the money and bringing the money back. So if you are investing in real estate, or if you're investing in the stock market, you need to make sure that that money is coming back to you, and we're not just throwing it out and hoping that the money's coming back. Because again, the banks are lending money out with collateral. They're getting a guaranteed payback. So the money is going out with a guarantee that money will be coming back. So just make sure that you keep that in mind for your banking system.
Yeah, and just an idea. One thing we did when we were investing in real estate, Dee, is the fact that we lent money out to real estate investors. We got first position on the house, and we earned our money back plus interest. And in the event anything happened with the house, we knew what to do in order to fix that house and flip it and make even more money.
Amen to that. So Ross says, if I own a bank, I never want to stop receiving deposits. You get what I'm talking about, sir. And Raymond Nelson Nash said, don't steal from yourself. Exactly. Don't
pay yourself first. Absolutely, Raymond.
Do not steal the peas. I have money going in a checking account when I get paid. So if I have a policy, then do I get that money direct to the policy? So yeah, if that money, for example, is money that you want to put into a policy, then you can just set up automatic payments with the insurance company and say, hey, draft $500 a month or whatever it is from this account. Hopefully that answers your question. Late, but I made it. All that matters is that you're here. Again, if you guys are here with us, go ahead and like this video. Thank you so much for all of your support and listening to us today. Wish I had been taught this years ago. You know what? People tell us all the time.
I wish the same thing. There's a lot of families out there that get this downloaded into them from birth.
Yeah,
that's what I hope to do for our daughter, is really teach her about finances, because we learn finances from our households.
Exactly. And just keep in mind too, don't beat yourself up too much, because when the student is ready, the teacher will appear. And maybe it wasn't meant for you to know this information before, but now you are ready to digest and consume this information so that you can do something about it.
Yeah.
At what point do you figure that you will no longer need the bank for financing? I assume we're talking about the physical bank. Honestly, I'm gonna
right now, as soon as possible. Right now, we don't have any debt ourselves, and when we do utilize funds for financing, we go to our family bank.
Yeah. However, there are levels to this. So if we're talking about from a consumer standpoint, as soon as possible,
yes,
we need to be getting rid of it as soon as possible. But if we're talking about leverage, if we're talking about business investments and things like that, then we may use the bank for different opportunities that make sense to leverage debt, but not from a consumer standpoint, just to make sure that we are leveraging debt to make more money. If you borrow money, that's what I'm saying. So there's levels to this. Let's see, what else are we talking about? So how do I go about getting another policy? And what would I use the money for? So
you shouldn't get another policy if you can't answer that question. Because you'll just have a life insurance policy just sitting there. You already have one for emergency fund that I don't think you're fully utilizing. So utilize the one you have so that you already know going into it how you're going to utilize the second one if you do get it.
Yeah, but if you are, for those of everybody who's watching, if you do feel like you're at a point where you can get another policy, the question you should be asking yourself is, if I'm sitting on funds that nothing is happening with them, then you really need to start having a conversation with yourself and saying, can I duplicate this again next year? So if I'm sitting on 10 grand right now, do I think that I can have 10 grand again next year? And then the year after that, and then the year after that. And if you can answer that question, yes, then it's probably time for you to start a policy, another policy, especially if you've maxed out your existing policy. However, if you say no to that answer, then we would say you might want to take a little bit of time to continue creating more cash flow or creating opportunities so that the next policy is more affordable for you, if that makes sense. I would like to contact you. How do we do so? So we right now do not do any one-on-one calls. If you want to become a client of ours, then you need to click on the link in the description and check out our masterclass and apply to become our client. Thank you for clarifying. No worries. How will Security Mutual Life assist me in setting up a policy that best suits my needs? So
well, when it comes to banking, there's multiple different companies you can use. There was one person using Mass Mutual. We also have people use Security Mutual Life. What's other companies? American United Life, Ohio National Life. There's a myriad of different companies that you can work with for setting up a policy. It's not about the company is where I'm getting. It's about the person that's setting it up for you.
Yeah, so to make sure we're clear on that, how will Security Mutual Life assist me? Security Mutual Life isn't going to write the policy for you. It's all about the agent that is licensed to work with Security Mutual Life. So it would be ourselves, it would be a member of our team that will sit down with you and create a policy around the financial goals that you are targeting. So it's all about the financial goals that you're targeting and how much you can afford with the policy. We marry that all up together and make sure that we create a policy that fits your specific needs. What's next?
Did you say daughter? Yes. We are expecting a daughter any minute now.
Any day now. Yeah. So we are due at the end of the month. So, you know, hopefully we have a baby girl coming. I'll show you guys. I've been able to hide my bump. Let's see. Can you guys see it? There's a baby girl. So yes.
What is the minimum policy you offer? Why can't someone have a policy with the blood sample?
So hopefully we can answer that question. Reflections, if you wouldn't mind clarifying for us. So what is the minimum policy that you offer? Right now, the minimum to get started is $6,000 on an annual basis or $500 a month. And why can't someone have a policy with blood sample? Not really sure what you mean by that, but what I'm going to say is there is a medical exam that's required. So
to make sure your insurability.
Yeah, so the insurance company is going to check your health because they got to make sure that you're healthy enough. So if you are thinking about maybe having to have some sort of medical exam, you do have to provide a blood sample and a urine sample and do blood pressure and things like that. So hopefully that answers your question. I would like to get a policy for my nieces and nephews. So absolutely, you can work on the generational or the lineage, so to speak. However, there is a hierarchy that needs to kind of happen to make sure that the parents are insured, you're insured first, just to make sure that everyone is covered before you start reaching out to the kiddos. Or we have to have a really extensive letter explaining the reason for you skipping generations and wanting to insure other people.
One question from for Eye Candy. I think I read your blog that your first policy was $10K and you stopped funding year 5. Does that mean you are not required to make annual deposits after that? We are going to continue making deposits. The insurance policy is just separated into two different parts. There's a base premium that pays for your death benefit, and then there's the paid up addition rider, which we use for cash value. So the cash value, we just stopped after 5 years, but we're still maintaining our policy with the base premium.
Yeah, the two parts that go into it, base premium, paid up additions. So we paid $10,000 for 5 years straight, and then the rest of the time we are only paying $4,000. So the next question is, can I buy a policy for a child in college? Absolutely. And can I still own the policy? Absolutely. So when it comes to owning a policy on a child, you own the policy, you are the owner, the insured would be the child, and then you would be the beneficiary on the policy. So that's how that works. And then at any time, if you decide I want to transfer this policy to my child, you can do an ownership exchange and they can then own the policy if you want to.
Cash flow, cash value, come get some. There you go.
Thank you guys for all the congrats. I appreciate that. Let's see what else. Something about my wife. What did I miss? That will also help me as my wife to be a personal baby care assistant. We'll let you know how that happens.
I plan on
Thank
investing
you
in
so
a
much.
franchise. Would it be great to wait until I get a policy and borrow from the policy, not the bank? As far as loans, I don't have all of the cash.
Mm-hmm.
If that can provide you cash flow for more than what you are borrowing, that's always the name of the game.
Mm-hmm. It is very important. Always make sure to just evaluate your situation. So again, is cash flow going to be generated? And if that's the case, absolutely.
And honestly, the only difference between a life insurance company or insurance company and a bank is the sign outside the door. They all want money. They want our money.
Mm-hmm.
So that's the thing. Let's not give them no more or no less than what we are planning on giving them in the first place. So if it is an opportunity for you to make money, make money. Always go for the money.
Yeah. And Antonio, you're talking about, can I insure my mother? So what I want to say, let me back up when I'm talking about being able to insure other people. So first thing is you have to have something called insurable interest, meaning would that person be at financial hardship should something happen to you? So for your nieces and nephews, you would have to make sure that you establish some sort of financial hardship. Like if your brother or sister were to pass, are you then financially responsible for the children? If something were to happen to your mom, are you financially responsible for the family in some way? So you have to prove that insurability first. The insurance company isn't going to just let you insure everybody. So there has to be a reason why you're insuring these people. So hopefully that answers your question and helps you understand the approach that you need to take when it comes to insuring family members, for example.
Cindy asked a great question. So when you stop paying PUA, does that affect your cash value growth? Well, the whole point of the PUA is to build up, have the cash value build up to a point to where you can just pay the base and it just continue growing.
Yeah, but the base is really what drives the policy, regardless of what people say. So for us, it's all about making sure that we use the PUA in the years that the base isn't growing cash value. So we're just using the PUA to offset those years. And then the minute that the base starts producing its own cash value, we take the paid up additions off because it doesn't make sense for you to continue paying the paid up additions when the base is contributing the cash value that you need. Yeah. So there's a little trick and nuance for you. But for us, we're trying to get you the biggest bang for your buck so that you don't have to just inject a whole bunch of cash to make the policy work.
Yeah, because like Carmen said, initially in a traditional whole life insurance policy, there's no cash value in the first 3, 4, 5 years. So the point of the PUA is to have that sit there and have cash value in those years that we don't have it growing from the actual base policy.
Yeah, I am disabled. Do I still qualify? Depends on your disability. It's always you should always entertain because it just depends on what your health conditions are. I'm 54 and outside of the US, I'm new to IBC. What is the first thing you recommend I do? Find a company that has the cash value mechanism that works similar to what we're talking about
in your
country, wherever you are. Can you own a policy for a 29-year-old child? Absolutely. Our parents own policies on us. So
that's the banking system that we tap into.
So you got big babies, that's all it is. Let's see what else. We want to make sure that we try to get to everyone's question. If you put a lump sum into the policy, how long do you have to wait to borrow against it? 30 days. Let's see what else. If I set a policy at $6,000 minimum, can I still add as much as I want? No. Good question. There is always going to be a limit to how much you can add to the policy. And depending on your age and depending on how much you're trying to contribute, that's going to be a factor in how much more you can put over $6,000.
Yep.
Can an LLC have a policy on an individual?
Yes, it can. But if something that the LLC owns that policy. Now, again, we're not tax professionals, but if LLC owns that policy while you are and something happens, then you have to pay taxes.
Yeah, absolutely.
But refer to your tax professional.
You just got to know what you're getting involved in when a business owns a policy. Can you insure a newborn grandbaby? Absolutely. You better believe this baby is about to be insured when she is 15 days old. That's when you can start insuring individuals. I have a policy with New York Life and was wondering, is it possible to change the PUA rider?
Not after the policy is in force. New York Life is a great great company.
Yeah, double check with your agent. We don't know the stipulations or in which it was created, but from what we know, once the policy is enforced, there's not much changing going on. Can I borrow from one policy to fund another to increase? Oh, look at you, Jeremiah. I like how you're thinking. So we're talking about cash flow. If you have cash and you own the policy,
you should refer to your agent.
That is creative financing, my friend.
You should refer to your agent.
Okay, sorry. Can I get a policy without a blood sample?
Oh,
good question.
Yeah, it depends on how much that policy is for. It depends on your age, the amount, your health, and it really depends on your health and the amount of death benefit for that policy.
Yeah, what Darius is talking about is how much you qualify for.
Yeah.
So if $6,000 is going to buy you over $500,000 in death benefit, then you're probably going to need a blood sample. If it's maybe a little bit lesser of amount, then maybe not. You may not need to take a medical exam. If I move to another country or live outside the United States for 6 months, can I still get a policy? Yes. We've lived outside of the United States for over a year, and we can still get policies. So how do you know when the base is producing the cash value as opposed to the paid up additions?
You look at your illustration. Your illustration will let you know. And the way we design our policies is when we get to a point to where we pay the premium and the premium is doubled in the cash value, or we get 100% of the cash value back, then that base premium is doing exactly what we needed to do.
And let's see, can my company take out a policy on me?
That's the LLC.
You're an asset, so why not? Financial hardship, you are an asset to that business.
And if something was to happen to you, then your company would be at a financial hardship, financial loss. So it's good that they insure you, so they can take out a policy on you.
Your strategy seems to be a little different, not wrong or right. Do you stop paying the PUA after 5 years? Yes, we do. Let's see, everyone hit the like button. Thank you so much, Jonathan, for the love. Yes, everyone hit the like button. Let's create some engagement. Thank you so much for the love. The premium would be your age times 10. Yes, we can say that.
All right, last question.
Yeah, last question. And
what is the time frame from opening a policy, funding a policy, and withdrawing a policy? We're not withdrawing. We're not withdrawing, so the time frame for withdrawing should be never. But the time frame from opening a policy and funding the policy, well, you open the policy and fund the policy at the same time.
Well, so basically what I think you're saying is from the time I start to the time I can get the cash, let's just say, honestly, it depends on the person. We can say 4 to 6 weeks, roughly. And the reason why we say that is because it depends how thorough the underwriting process is.
And how responsive you are.
Yeah. So from the moment that you start your application and then we submit everything to the insurance company, they may have 50 questions that they need answered. And if you're able to respond to those questions very quickly, then maybe we can get you out the door with a policy soon. But if you're not responsive, or if the insurance company just needs a little bit more thorough investigation of your health, that could take, a week or two. So
yeah, I've gotten policies in. I've started a policy process and gotten a policy loan within 2 weeks.
Yeah.
Because I already knew what to expect and I gave them all the information up front. So
exactly. But we've seen, especially if you're military, we've seen the process take 6 months.
Yeah, because military, they take forever to get their medical records.
The VA can be challenging to work with. So just to give you a little bit of perspective there. So yes, Antonio, thank you for correcting.
Basically, compound interest. What is it? How do you build it? And how does it make you build wealth?
Well, compound interest is the gem to building wealth. Because the thing about compound interest is the fact that you earn interest on top of the interest that you earned previously.
Exactly. So, now, if you don't know what compound interest is, check out this video where we explain it. We talk about compound interest a lot on our channel, but we just want to continue to hit home with the thought of what compound interest is, because I know for me, in my financial education, I didn't really know what compound interest was. It sounded super sexy and I was excited about it, but I was like, wait, what is that? One more time? So I'm sorry, go ahead, finish your thought.
So just to talk about compound interest is something that you can earn in your savings account.
Yes.
Because as long as your money is sitting inside your savings account, you can continue to earn interest on that amount. Now, granted, the money inside your savings account isn't earning very much interest,
not these days.
That's the idea of earning compound interest, the money has to sit there in order for you to earn it.
The money has to sit in order for you to earn it. Again, like we said, we talk about this all the time, but for whatever reason, it didn't click for me in my journey, because I just thought, oh, the money's in the savings account or it's invested and I'm earning the compound interest. But every time you touch that money, meaning something comes up and you got to pull from your savings, or something comes up and you got to liquidate some funds somewhere, you affect the compounding rate, right? So if you touch the money, now that whole pot that was earning compound interest is now affected, meaning you're probably earning less interest because you have less principal to deal with. So again, just keep these things in mind, because when we talk about wealth building, it's about preserving your money. It's about maximizing your money. And if you're constantly toe dipping, you're affecting the growth.
Yeah. Now, the next point that I want to make is the fact that the secret to building wealth is being in multiple places at once. So you want to be in a place where you can earn compound interest, but you want to be also in a position where you can take advantage of cash flow opportunities or opportunities to make more money or to invest. So one of the tools that we use for that is whole life insurance, because of the fact that the money that's sitting inside of our policy can continue to earn interest, and we can leverage those funds in order to borrow from the insurance company.
Yeah.
Now, there's a lot that I said that needs to be what did you say? Uncompacted? Unraveled.
There you go.
In that conversation is the fact that you use your money as collateral to borrow from the insurance company. So the first thing about compound interest is the fact that you can't touch it if you want to continue to earn it. So that checks that box, because we're using our money as collateral.
Now, to further unpack this, again, when we think about compound interest is, okay, typically people only know that you can earn compound interest in a savings account, a CD, or maybe some investment. But you have to touch that. If you touch that money, there goes the compounding. So for us, we then had to redirect our options to say, is there something that's out there? Is there some sort of financial product out there where we can earn compound interest? And if we need to touch the money for whatever reason, we're not affected. So all it is really about educating yourself to understand what are your options, because a lot of times all we see is what's in front of us, and then that's all we deal with, when sometimes we need to peel back the layers and figure out, what exactly is going to work for my circumstances. Like Darius said, for us, that's whole life insurance. The reason being is because when you put money into your policy, or you pay your premium, for example, you pay your premium, that amount of money is going to go towards death benefit, and there's something called cash value, which is a savings mechanism that is inside this life insurance policy. So it acts as a savings account on steroids, as we like to say, because you can earn compound interest and you have a death benefit at the same time.
Right.
So with that, we get this question a lot, as people say, oh, well, if I borrow from the funds, does that affect my cash? And no, it doesn't, because you're going to get a loan from the insurance company. Like Darius said, they're going to use your money as collateral, meaning their guaranteed payback. They're just going to hold on to it, and they're going to give you their money instead. So because you haven't physically taken your money out of the policy, you aren't affected by the compounding.
So the point in which you would no longer earn compounding on a life insurance policy is you actually die.
Yeah. And or you withdraw the
or
funds.
you withdraw the funds. So comment below and let us know, what are some different places where you've learned that you can earn compound interest other than a life insurance policy.
Exactly. And if this is something that interests you, then click on the link below to join the Wealth Nation. We'd love to serve you.
Absolutely. Now, another point that I want to make is the fact that when you are earning compound interest inside your life insurance policy, that just checks the box.
True.
That's all that does with compound interest, is it just checks the box. What you are in control of is what you do with the money that you leverage or the money that you borrow. At that point, this is where you want to start investing in what you're good at, be it the stock market, be it real estate, be it Bitcoin, whatever you're good at, you use that cash so that you can start earning not only compound interest, but also interest from your investment on top of the compound interest that you're earning in your life insurance policy.
Yeah, I think that the point to really understand here is that we're just talking about how to maximize our savings. And I feel that as a society, we can't differentiate between savings and investing. For whatever reason, it's all the same. And it's really not. So for us, when we talk about, pay yourself first, that is the amount of money that we're talking about you're saving or you're paying yourself first, that will then allow you to use as leverage one day to invest if you want to. But for us, again, it's about putting our money into an environment, putting our savings in an environment where it's going to work for us. And then if we want to invest or create some sort of cash flow, we can then utilize those funds to further our financial goals. But for us, it's not about just paying ourselves and then literally taking that money and investing it and risk losing it. The reason why we use a whole life insurance and whole life insurance policy in the first place is so that our savings can be protected. And then when an opportunity presents itself, we can get a loan from the insurance company, leverage those funds to invest while our money is still still protected. And then whatever cash flow comes from those investments, we're paying the loan back and putting any extra interest that we have earned back into that policy, which is going to grow the cash value. So it's a little bit of a complicated process, but once you understand how this works, that's really what it's about.
Yeah, and it's really understanding the rules. You pay yourself first, you pay yourself interest, and then you recapture the funds that you have in your investment. You can't go straight to step number 3 without doing number 1 first.
Yeah.
So if you don't have a savings, then you can't create a place to earn interest or recapture if you don't have anything to build off of. Anything times 0 is 0.
Yeah.
Right?
Yeah.
So we can't go to step 3 without first paying ourselves first. So we have to have discipline in order to start this whole process. If you don't have a savings account, you really can't do it.
Yeah, and to build on that analogy, it's like driving a Ferrari, but you don't understand how to drive a stick shift car, nor how to handle a sports car. It's all about, you got to start with the building blocks and put certain things in place so that you can get to those investments and things that you want to do. But far too often, people just take any cash that they have that they're sitting on, throw it in an investment and cross their fingers and hope to God that it's going to pan out. And they're trusting someone else to handle it for them. So one, you're already messing up because you don't understand the investments that you're getting into, understanding how the money works, your payout, how all of that is going to work, your exit strategy, and you're literally just taking your life savings or whatever money you have and throwing into something without protecting it first.
Yeah, and I like the analogy you use. It's kind of like having a Ferrari without an engine. You need that engine in order to consistently be moving or be in motion so that it can drive the car. What's going to drive your vehicle is going to be your savings.
Yeah.
We have to consistently be saving in order to do this whole banking thing.
Yeah. And to build wealth, because when you think about millionaires and people who are successful, millionaires and billionaires who are successful with money, they hold on to their money. It's not all about saving it. It's all about, payday's Friday, let me go spend all my money. No, that's not the case. That they have rules and regulations in place for this money because they treat their money like a business. And that's what we are always trying to teach our clients and teach our followers and our subscribers, is it's about paying yourself first and holding on to the money so that you can leverage it to build exponential wealth. Yeah,
at the end of the day, there's rules to wealth. There's rules to money. There's rules to everything we're doing.
Amen to that. I totally agree. All right, so since we've hammered home what compound interest is, where we earn compound interest, I want to know from you, Darius, before we got into this industry and learned about money, what was your thought about compound interest? What did you know about it?
I didn't have a thought about compound interest. This is something that didn't even register for me at the time, because I was just go to work, save as much money as you can from your job or whatever's left over after you pay your bills, and then continue that cycle. And what I didn't realize is that, my perspective about money would change based on the lessons that I've learned.
Oh, okay.
Because once I learned this idea about compound interest, once I learned this idea about using life insurance, my whole perspective of money shifted.
In what way?
Well, it shifted in a way that I realized that I was kind of putting the cart before the horse, where I was paying all my bills and then I was savings.
Yeah.
So what I started doing is, saving first and then paying my bills, which guaranteed a savings account that's going to continue growing. And it kept me from getting in trouble from overspending. Because, when you look at your paycheck, you see that you have all this money. First thing you want to do is pay all your bills. And then you figure, okay, now that I can pay my bills, I can go and have some fun. Yeah. But what we have to do, or what we started to do, is we realized that, you have to put yourself first. When I say first, meaning your future self first, then you pay your bills, and you have to create rules for yourself. Like how we mentioned earlier, you have to create rules for your family. There's rules to wealth, and you have to kind of match those rules, with your own household, so that you can get the results that you want. We weren't building for the results. We were building for, making sure the bills were paid.
And immediate gratification.
And immediate gratification.
So you said something that I want to talk about a little bit more, where you said you were putting the cart before the horse. So what would you say to those individuals who are like, Darius, what do you mean pay myself first and then pay my bills? If I do that, my bills aren't going to get paid.
Yeah, that's an example of maybe we are living above our means. Because I remember we had someone commented, or someone sent us a message saying that, this is for someone that has over $100,000 in income. No, you can have $200,000 in income and not have any disposable income because you're not saving. So what I would say to those people is take a look at your wealth management system and make sure that everything that you have is something that you need. Absolutely need.
And what we consider wealth management system is, a lot of people would say budget, for example. It's just a plan. What are the numbers, the inbound and exbound factors exbound, that's not even a word, outbound. Inbound and outbound. And what are the inbound and outbound expenses that you have, and tallying all of that up, doing the math to figure out what are those numbers.
Basically your cash flow.
Exactly. So I ask you that question because we get that a lot. Like, what do you mean pay myself first? If I pay myself first, then I don't have any money for my bills. And if that's the case, bingo, jackpot, we may have a problem.
Yeah, because if you don't have any money left over, that means you're just working for those bills. You're working for your house note, you're working for your car note, you're working for your electricity. You are working for those things. Now, the thing about it is at some point you won't be able to work anymore because, as we age, we start to slow down and our intention changes. So one thing that we have to take into consideration is that we need to build a system around us not being the ones doing all the work. We want the money to do the work for us.
Yeah. And I really don't like to compare, what we're doing when we're working for something, but we keep calling it dependence. We're dependents. Call it slavery. Whatever you want to put out there when you're working for something, for the electricity bill, for your mortgage, for your car, and there's no room for error. If you get sick or something happens with your kids, and now those expenses are pulling from your bills, you're really strapped for cash, and that's not where you should be. And this is not a judgment zone whatsoever. We're just informing you that this is not right. And I think for us, when we were going through our whole journey, that was just normal for us. We didn't know that this isn't normal. Does that make sense? We were just like, we're just always working for the bill, and we're always just squeaking by, but this is not at all anything that anybody should be accustomed to doing or adopting. So we just want to, scream from the rooftops and let you know that there are solutions. You just have to put yourself more in control of what's happening with your finances and really understand what do you need versus what are some things that you probably don't need.
Right. And it wasn't until we started doing that that we could start doing this process of banking.
Exactly. And we're talking about this because it relates to your savings, which then relates to compound interest. How are you going to earn compound interest if you can't even save a buck in the first place?
Absolutely.
Right?
Yeah, there's rules to it. There's things that needs to happen before you get to step 2. You need to first do step 1.
Chicken, egg, chicken, that whole deal. So with this whole process, so we talked about savings, we talked about compound interest. How does this affect you from a wealth building standpoint is your money should always be working for you regardless of what you're doing. If you're out doing a picnic, if you're doing some home improvements, if you're on vacation, your money should always, always, always be working for you and working without you, because that's where the true wealth comes into play, where we're talking about passive income versus active income. And if you're already earning passive income, meaning that you aren't trading time for money and you're earning compound interest with that passive income at the same time, that's just exponential growth when it comes to your finances. And it's just about the building blocks. There's steps to this, that it's always a process. We're always learning. We're always tweaking and changing. This isn't something that's just going to be stagnant once you set up a system in place.
Well, the thing is, wealth or building or anything that you build has to have a foundation.
Oh, yeah.
And our foundation is going to be our savings or our savings habits.
Yeah.
And then what we build on top of that is what we invest in.
Sure.
And then what comes on the next level is, the passive income that we create so that it can tie back into our savings.
Totally.
So our foundation is always going to be savings. Anything you build has to have a foundation, a solid foundation.
I love that. Whether it's business, whether it's money, whether it's relationships, everything has to have a concrete foundation. You don't want to build your foundation out of straw.
Yeah, or on sand.
Or good one. Now, for me, how I learned about compound interest is my dad was in the financial industry, and he would always talk about compound interest. And growing up, I always heard it. Didn't necessarily knew what it was because I was a child. And I knew that, my family was all about it. It was something that was really important. And it wasn't until I became adult that I really started to understand what compound interest was, where I said, oh, okay, that's cool. But I never it never interests me in the sense of like, okay, my money's in a savings account. That's cool. But again, it goes back to the lack of education on my part as far as making sure that I was maximizing my funds at the end of the day, because I was really focused on my career in corporate America, and the money that came from it was great. But at the same time, I wasn't then focused on the money that came to me, every other Friday or whatever it was.
Yeah, I would say that's an example of, you were introduced to concepts, but the education didn't continue, so you can apply it. So that's something that happens in a lot of households. You were introduced to a concept very, very early, but there wasn't a follow through.
Yeah, that there wasn't the applied learning, because really applied learning is when you learn something, then you apply it. So that's what I was missing, was the application of it. So, and that's with anything in life, think of all the things that we don't have any applied learning towards. We learn things every single day, but what are you actually taking and applying? That's where the true knowledge comes into play, because you actually are executing and learning and molding these things that we learn every single day.
Yeah, just like with banking, right now it's a theory. As you watch this video, you're getting the ideas, you're getting the concepts, you're getting the vocabulary.
Sure.
But it's not until you jump on that bike to where you can understand how to ride it. It's not until you get in the water to where you can understand how to swim.
You're right. Because we get a lot of people that are like, tell me everything you know about infinite banking, or people that are like, oh, I'm going to wait for the right time, or I'm going to wait for the right season. And again, that's where you lose the application and the knowledge, because you don't take the time to get on that bike, to fall off the bike, to, get some bumps and bruises along the way, because you're learning and you're trying to figure out how this works and how you should, pay your bills through the policy, how you should invest using your policy. We can talk about it all day until we're blue in the face, but it's until you actually apply these principles that we're talking about where the knowledge comes into place in the first place. And I would say for us that the biggest thing that we want for our clients is for you to apply the knowledge, because nobody's going to care about your money more than you. And you need to be at the point where you're ready to be in the driver's seat and take control or own your own lifestyle, like we always talk about when it comes to your finances.
Right, because you can have us help you through the foundation piece, but actually earning the passive income and the investing, you have to take ownership of that part, because that's a reflection of what you're good at, not what we're good at. It's a reflection of you. So a lot of time people get stuck in that transition. Of going from the policy to paying off all your debt or paying off whatever you want to use the policy for, to then using the system to earn more money, to grow your system so that you can pass it on.
Or people get stuck, they just get the policy and then they don't do anything with it.
Yeah.
And at that point, you just have life insurance. And why did you spend all this money for life insurance if you aren't going to use it? That's where I think the argument comes into play is, well, should I use this or should I not? And is this a good thing to do at the end of the day? So if you get a policy, it's always with the intention, with the purpose to create passive income, to generate wealth, to do something with the policy. Because if you just get stuck in the numbers of, what this can produce for you, again, we're just talking about life insurance.
Yeah, because that's when you get in a conversation of how some people buy whole life insurance and some people buy term insurance.
Yeah.
People buy term insurance if they're not going to do anything with it. They just want to cover their death in the event something happens. Death insurance. Now, when it comes to whole life insurance, a lot of wealthy people buy whole life insurance because they all have something to pass on. They all have some type of trust or some type of legacy that they want to pass on, which has whole life insurance coupled with the assets.
Yes.
So they are passing on a system. We only get pieces of the information, but you know, when you start to unravel this thing and start to learn what other successful people are doing, then you start to learn the process in which they are passing these things on.
It's true. And that's really what we want everyone to understand is maybe there's something that we just don't know. Possibly. And that's with anything in life. Like I said, Darius and I are constantly learning, and the subjects that we're learning every single day, we just realize that there's just so much out there, and it's really about taking control and owning your own lifestyle with everything that you do to make sure that you're putting yourself and your family in the best position possible.
Yeah, and I can guarantee you, if this is your first time hearing about how we utilize life insurance to, you know, borrow the cash value and pay for our expenses or finance our lifestyle, that's only the tip of the iceberg.
Yeah.
You know, what you're able to do with cash that you have control over is unlimited. And some of the things that people are doing with these things, like, you know, Fortune 500 companies or banks or, you know, our elected officials, how they're utilizing whole life insurance is different than the way we've been taught how to use life insurance.
Exactly. So with that information, go ahead and check out our next video where we talk about infinite banking, becoming your own bank, and how you can utilize whole life insurance to further your financial goals.
And click on the freebie below where we talk about 52 different ways on how you can utilize life insurance to generate passive income for yourself.
And make sure you own your own lifestyle.
Or someone else will.